Vince Castoro with Capital Partners Home Mortgage. We have Althea, how about you introduce yourself and promise ourselves that from now on, each individual is going to introduce themselves. So I'm Ron Suarez with the Ties Real Estate Company.
And I am Althea Studemeyer with the Ties Company.
And behind the scenes, we have our
Lovely.
Alexa Alvarez, who's actually managing it. So thank you very much, and thanks for tuning in. A little introduction for Vince. Vince is our in-house mortgage lender with Capital Partners. He's been in the business for 30 years as a local lender here. We are proud to say that our family of services is second to none. And with that, give it to Vince. Vince.
So, and family of services is really defined by mortgage, title, property management, and insurance. So, I'm glad to be here, Ron. It's, 30 years is a long time. I've seen a lot of, I'll put it in perspective for you guys. When I first got here, a 322 house on a lot was $74,900. And that was the FHA loan.
That was a condo.
That was the maximum loan you can get for FHA, and put it in perspective for you, that's up to $365,000.
So step from 74.9 to, wow. That's,
So I'm just dating myself.
hey, Vince, just so that everybody out there, so a 3-bedroom, 2-bath, 2-car garage house, 74.9 when you first started.
1990.
That's amazing. Hey, Vince, how about put it in perspective? And what was the roundabout? What was the interest rate back then?
Back then, if you can get 9, you were ahead of the game. We were just coming out of double-digit lending.
Right.
That was back in the day when, interestingly enough, no internet lending. That predated the fax machine. So we used to hand people their loan applications and it did okay. Say, this is your yellow copy. So,
Oh my God.
yes, that's how long I've
I
been
guess
doing
I,
it.
it
So,
was when I did something like that. I don't remember that I was doing the online thing.
Wow, that's amazing. So the
so that's why everyone considers me a subject matter expert, because I'm the only one left. Everyone else is dead.
Okay.
Wow. So that's keeping it real.
Oh, that is
Absolutely, right? I mean, definitely 9%. I mean, most home buyers today are seeking financing. I'm looking at rates anywhere from 2.9 to 3.1, right now.
High 2s, low 3s.
Yeah.
Which makes things so affordable. I mean, it's amazing to me, and those of you at home, if you're calculating, you could just use $5 for every $1,000 that you borrow. It'll be a little high, but a $200,000 house is only going to have a $200,000 loan amount is only going to have $950, $1,000. So, what as prices increase, rates have helped so many people get into houses where it wouldn't be affordable. I know you guys know we drive the economy, especially here in Florida. We don't build any widgets. We don't have big unions. We don't have manufacturing. So, our position really between real estate, which, throws off all these other revenue streams, title and home inspections and insurances, you guys are really driving the boat. You guys are driving the economy, no doubt.
Right, amazing how important the housing market is, or that probably either that 1 or 2 position behind tourism, and possibly tourism feeding the market, and our market feeding tourism at the same time. So certainly can be said with that. So I mean, what is the number one thing, what would be the difference? So we have our family services, Vince and Capital Partners is an underwriter. We underwrite our loans. What would be the difference between what you do in our marketplace, for sure, besides another big box lender? How do you see the difference?
So talking about the different types of lenders.
That's right, yeah.
So, and this is critical. So you need to know who you're working with. Your client needs to know who you're working with. So I'll break it down for you guys really easy. You have what's called a mortgage broker. Know that a mortgage broker cannot make credit decisions nor does a mortgage broker fund the loan. So in my opinion, for what it's worth, if you don't have the ability to fund my loan or actually approve it, I can't see that would be my first step. So really the next step in lenders are, there are lenders that do have the ability to underwrite and close loans, but they sell you a loan the day you close. So these are considered correspondent lenders. They're not always making the credit decision, and they don't service their loans. And when we say service your loans, that means who you make your payments to. So when you're working with lenders that service loans, which means they're not only making the credit decisions, they're not only funding the loans, but you're making your payments to them. So 2 years down the road, if you have a problem with an escrow, you have a question, you don't have to call an 800 number. You're just calling us. So, from a real estate standpoint, from an agent standpoint, from a buyer standpoint, you want to eliminate any person, any entity or business that's not servicing them. That's first and foremost. Now, you have what we call the big box banks. These are your Chase, Wells Fargo, Bank of America.
I have experience with Citibank.
They have local offices, but it amazes me in doing this for 30 years that clients still think that because they have their checking account with this bank, that they're the best or they know the most about it. The only thing that bank can do is actually give you a copy of your bank statement. They have no idea about your credit, your income, your assets. And here's the saddest part about that, and why I still to this day can understand why an agent would accept a pre-approval from a big box bank when your client walks into the big box bank, because they say they're local. Yes, they have local branches, but they're not a local lender. That client is put at a desk and they call these 800 number, which drives them to a service center in Ohio or Alaska, or more likely Dubai. Okay, and
And just so the folks are listening, so how many times have you called up like JP Morgan where you have an issue with your bank and you're not calling Chris or Joe or Anita, the person that you deal with at, wherever you're, and big kudos out to you, Nina, over there at Beachland Boulevard, if you're listening. You're over there at Chase Bank and doing a hell of a job, so don't take this personally. However, when I'm calling them up, I'm not talking to people that know my situation.
So right, your client who thinks they're best served going to the bank is just put at the desk and they call an 800 number and they're dealing with whoever's in that rotation, which although could be licensed, I wouldn't say is your top. And again, there are a lot of good loan officers at these big box banks. Here's the bottom line, people, and this is what my mentor told me. If you cannot at any time sit across a desk from your lender, then you're not working with the right.
Well, that's a great advice.
It's just that simple.
What
So-
about credit unions? What about credit unions? I heard that they, are pretty good and personable.
Great question. So glad you brought that. Credit unions, and we talked about servicing. Your credit union, although knows you by your first name when you walk in, hey Althea, and they put a little love note on your statement. Your loan is sold the day you close. There is not a credit union that I know that services loans. They take your loan, they underwrite it to Chase's guidelines, and out the door. So, and again, I think credit unions provide a great service to the community. From a mortgage option, again, if you're not servicing my loan and you're not making the underwriting decisions, then I got a little problem with it, and it goes back to the worst of the worst of the worst.
And you're speaking 30 years experience.
Right, this is thousands and thousands of loans where, because remember, guys, I get the call when your client's credit union drops the ball. I get the call a week before closing when your buyer's got a pre-approval from Chase, and all of a sudden that loan officer is not calling everyone back. and you're calling the 800 number, which says, press 3, press 5, and then you get hung up on, and, at the end of the day, Chase, Bank of America, Wells Fargo, they're really not gonna lose sleep if your deal closes on time, or it doesn't. They offer mortgage services simply as a service to their banking industry. Now, the one that we talked about mortgage broker, talked about big box banks, we talked about credit. Okay, we have to talk about internet lending.
You mean the kind that
Online
you push a button
Yeah.
and all of a sudden this spaceship comes out and all of a sudden, look, he's getting
That's a
tense.
limit,
He's getting tense.
We have to talk about your
So
internet lending.
the rocket ship takes off and rainbows and sunshine, unicorns out there all over the place. I'm moving in, no problem. Every realtor's nightmare. Can you tell us a little bit more about it?
So, and I'll say this for the local community, if you're a listing agent and you accept a pre-approval from an online bank, then you get what you got coming to you. Because if you've taken that house off the market based on someone, again, that you can't call, that's not local, that, it's about accountability, right? We used to talk about, look, I can't not do a good job. My kids go to the same schools your kids go to. We shop at the same grocery store. This used to be a lot smaller of a town, but even so, especially I'm in your offices. I have to be accountable. I can't just not call anyone back. It's unheard of, right?
Absolutely.
So-
You're gonna get a can of tuna
So let's-
in the aisle
Right.
or aisle 10. Pick up.
So let's talk about your internet lending. So these are the ones that drive me crazy the most. They're the highest, the deals that fall through at the last minute are mostly from your internet lender. So I'm gonna touch base on two things. One, yes, they have very slick advertising, and yes, just like us, you do an online loan application. Here's the difference. When that online loan application comes in, if your credit score is over 620, any other information on your application is assumed accurate. Which means, if your client said they made $1 billion a month, then they go, okay, here's your pre-approval. The questions asked. Unfortunately, your client, based on that pre-approval, you go, show them 12 houses, find one, deposits, appraisals, inspections, thousands of dollars of trading hands. Contract comes back to the lender. Someone with a brain gets that file, because 2 weeks have elapsed. Underwriter gets that file and says, it turns out that $1 billion, really not on point.
Yeah,
Just a smidge short of that. And, your client's self-employed for less than 2 years, they had a short sale or whatever, a bankruptcy, whatever guideline that initial computer is not reading, or that initial loan officer may not be qualified to know. And now you're 3.5 weeks into a file that should have never been qualified.
And just to touch up a point here, and something that's probably relative to our business here at the Kai's Real Estate Company, on the real estate side of the family services, is, for sale by owners, the advantage of having an agent, right, is that this is the resource that we have. So when and hey, I get it, like everybody wants to say where they can and make the maximum that they can. However, here's the resources that you just can't put that dollar sign on as far as commission. It's the resources of our family services and Vince's team helping us out during the sale. So,
Hold on, can I touch base on
Sure.
FSBOs real quick? Look, I know real estate's, flying off the shelf and everyone thinks they could sell their own house. Here's what ultimately happens. Client comes in with a FSBO and we get the loan application. The first thing that happens is the contract's a train wreck. That's the first thing that happens. People don't understand that the definition of contract is binding. These dates don't match. Title companies aren't picked, appraisals can't be ordered. I promise you, if you're thinking about selling your house on your own, even if your agents are worth the money, the buyers will pay the difference in the sales prices anyway. And now you have a deal and a property that's actually transferable in a legal way that goes smoothly instead of chucking it against the wall and see if it sticks. Yeah. Sorry.
We were talking earlier about, cash versus a loan. Can you give us an example of what's happening now with the market? Because we can go and show a property and before we're out the door, there's already an offer, someone else has already offered. Or you have several realtors waiting
Multiple
at,
offers.
multiple offers, several realtors waiting at the door to see that one particular property.
If you want to ask, and I'll expand on that because people ask me what the market is today and I go, it's Disneyland market. And they go, what's a Disneyland market, Vince? And I go, well, you're gonna be with your clients waiting out the door, and due to COVID, there's gonna be another realtor 10 feet behind you with their clients waiting to get in the door and behind them. And next thing you know, it looks like you're waiting to get on a ride at Disneyland. There's 12 people lined up to get into this house, right?
Yeah.
That's besides the people that are doing it sight unseen, saw it online.
Maybe some people like that, I don't know.
This market is crazy. So what an excellent point. So the market today is that the buyer needs to understand that this market is not positioned for sellers to even consider offers that are contingent on finance. Why would they if they're getting several offers that are capped? So what our job is to increase that buyer's buying power. We need to stop with the pre-qualifications. Let's say you kind of sort of should be okay, or the pre-approvals that have very similar language. Our obligation is to position your buyer as a cash buyer. So how do we do that? The difference is instead of taking everyone at their word or what they say they make, we collect the pay stubs, the bank statements, the W-2s, the tax returns, the awards letters, the IDs, you name it, at the pre-approval stage. This is usually before you've even shown them the house. Yeah.
And just so you folks all know, in conversations outside of this thing, Vince's famous thing is, if your client doesn't say cash, then the next conversation should be, let's get you to a lender.
Right.
So the first right out of your client for cash, we should be the second phone call. And, we tell you guys no before you show, right? We want to, we're a team, right? And your
Yeah.
client doesn't know that, but they're getting an all-star
Right.
team. They're getting an all-star team. And
Did you hear
we're,
that all-star team?
so we're gonna position that mortgage to make sure that your offer matches the financing that can meet the criteria to close on.
Which is more realistic for the
Right.
buyer at that point, because then they're not taken with visions of grandeur about a house that, is really outside their affordability range,
Right.
correct?
And it's even to the point where, how do we convince a seller to take an offer that's contingent on financing when there's so many offers to accept? Well, the first way is to forget the pre-approval. We're issuing full loan commitments. And what we're doing is we're fully
It's a full loan commitment prior to.
correct.
So even to have the on the contract,
That's
so
how.
it was like a
So-
cash. It's cash.
It's cash. Now, the difference between, you guys hear the word commitment all the time, right?
Mm.
Well, the loan commitment means the file's been fully underwritten
Mhm.
and ready to close. So our loan commitments are only subject to what we call the collateral side of the file, which would be things that we don't have yet, which would be contract, survey, title. If you guys want to get a home inspection, homeowners insurance, HOA approvals, and stuff that is specific only to the property. So when your client comes through the door with us, we're collecting all this information now. Some of your clients, they know they're an 800 middle credit score and they know they're fully qualified, and we go, that's great. Send me the docs, because now I've repositioned your bar. Instead of a pre-approval, I'm going, here's a formal loan commitment, I can close this in less than 30 days. Now, you guys all know what's going on with the contracts and the differences in the commitment timeframes, and maybe we'll touch base on that a little bit. But here's what's important. if I'm able to issue a loan commitment now, and again, with me, it's a little different. I'm very blessed. I've been here 30 years. It's not uncommon that I don't know the listing agent, had a couple of transactions with them or the broker or someone in the office where I could pick up the phone and I could say, Ron, you're gonna get an offer from Althea's client on 123 Main Street. I want you to know that we fully underwritten Althea's client's income, assets, credit. You can close this in 30 days. We only need the appraisal, title, insurance.
That's powerful, because then I can turn around, have that same conversation with the seller, say this is a bona fide offer. I have the word of the lending officer who's actually underwriting the loan to say that this is a done deal for us.
Now, let's move back to your Chase loan officer or your,
Citibank one.
they're not even telling you if they have a client. Oh, we can't tell you that information. Okay, well, you sent me a pre-approval. Oh, yeah, that. They won't tell you anything about their client, which is okay too. But in the same token, you want your client's offer accepted. So we have to do things over and above that separate your client's offer from everybody else. So, you know, the fast track, what we call them, the fast track approvals are the formal loan commitment subject to only appraisal, title, and anything that's specific to the property. That's powerful. That's moving the needle, guys. That me picking up that phone, no other lender I know is doing that.
And that's the difference, because you're taking, I mean, our job as real estate agents is that we're connecting buyers with lenders. I mean, I'm sorry, yes, buyers,
Right.
and then the seller, right? So we're connecting that buyer and that seller. We're reassuring the seller that the money's there. We're telling the buyer, prior to them even looking at a property, what they're capable of doing. It's a powerful tool.
What's your timeline for an application? Someone sends the application today.
Great question. I'm hoping that your client applied. Okay. 2 clients today, I have 3 phone calls with back and forth. For the love of God, help me stop the phone tag. Help me help you.
And just so everybody knows, on the back of business card, he makes that explicitly clear with offering, apply,
www.vincecastoro.com. So
please.
what happens is, if they do their online loan application, we're viewing them same day or no less than 24 hours. We get that borrower's application, we're immediately contacting them, letting them know that we can issue your pre-approval, but we want to increase your buying power, move it to a fast track, which is a full loan commitment. I need your pay stubs, bank statements, W-2s, tax returns, whatever it may be. Honestly, these clients these days, you know, and granted, not everyone's as computer savvy as everybody else.
As Alexa.
Most of these clients can gather this information, they upload it securely, or they, you know, or our emails are encrypted, so they attach it to an email, electronically send it. It's usually viewed from cradle to grave, 72 hours.
3
So
days.
by the time you figured out what neighborhood these clients want to be in, it's really that simple.
That's
Now,
amazing.
a lot of that has to do with, you know, the client reacting to our request. But in the same token, that's how fast it is. And here's what makes that better. I fully approve this loan. You have a contract. Because you now have a contract, how long do you think this is taking? I only need to update maybe 1 pay stub, 1 bank statement, and I'm done. I'm done. I've done all the work. So all the legwork is done up front with us. Now, other lenders, again, it's not cost effective for them to do that. You tell them how much you make, they say, okay, they don't want to spend the time, money, and resources to document anything until there's an actual contract. Because we process and approve out of 100 loans, 20 of them never buy properties. For whatever reason, they can't find one. Who's getting relocated, the job that they thought they were gonna get, they didn't get, who got sick. So, but we will spend the time and money to fully approve that loan, knowing they're not under contract, it's very expensive for us, but I think it separates us from a lot.
That's amazing. So in the past 120 days or so, where so many folks were into buying property at that time, where they lost 3 or 4 houses because they were financed and you had cash. Had they had just done that fast track, they could have actually competed with that cash offer.
Yes, and
And because I think, tell me again, like, if you have cash, maybe you're not at that full list price, right? Maybe if you're financing, you could be at that full list price or actually beat it by maybe 5%.
correct, and you know, look, at the end of the day, if any of you have ever sold a property or have ever been to a closing, at the end of the day, the money gets dispersed the same way, right? Title company wires the money to the seller, hands them a check. Doesn't matter if that buyer had cash or not, they're not actually walking in
With
with
cash or.
actual cash. So at the end of the day, the monies are dispersed the same way anyway. But you're absolutely right in the fact that, you know, improving your buyer's power and again, us calling the listing agent, you know, and this is only at your request. We don't arbitrarily pick up the phone.
Right.
We don't tell you what to offer and what to accept and who to, but at the end of the day, you know, that phone call and having that fully underwritten file is a completely different conversation than, you know, think about it if you were listing a house and you're the listing agent. Guys. Well, think about if you're the seller. Forget about being the listing. If I'm a seller and you're not buying my house in cash, I'm already nervous. Then you're telling me your client's only putting 5% down. Now I'm in a general panic. Then you tell me there's a pre-approval from an internet company, or even worse, you know, the buyer's sister's uncle's cousin in Iowa, whose friend is a mortgage broker. No way. It's just, I'm not accepting that offer.
So
Yeah.
let me
I have-
ask you this. Oh, go ahead.
I have a question about that you mentioned that I have couple client buyers that comes with pre-approval. And they don't even have money for closing costs. They don't have money for down payment. And it's like, how you have a pre-approval and how you want to see a house and put an offer to something. I mean, I don't know this company that are
Yeah,
giving,
well, that goes back to whatever you say you had, the internet companies, the big,
Right.
they're not verifying anything. So if you say you have X amount of money in the bank, well, you qualify for a conventional loan, and then you come to find out that they don't have near that amount. So, you know, if you're a listing agent, you know, if you're not working with us, at least work with a lender that services their loans that are local. You know, there's
Is that because of the appraisal? Maybe because they know the area? Is that?
they're accountable.
Right.
Nothing more than being accountable. You know, we go to the same board of realtors meetings.
Yeah.
You know, I don't want to duck my head from Althea because I didn't get her deal closed, or I said it was approved and it wasn't, you know, but, you know, calling that 800 number, you won't have a hear from that officer again, ever. So, you know, I think there's a lot of benefits to companies like us, you know, or myself with the level of experience and the fact that, you know, here's what the difference is. I mean, you put on these webcasts because you care enough about your clients to show them the difference. You know, you're not just out there buying leads like other realtors, and they could care, you know, how much where do you want to be? And they email you 7 listings. Tell me which ones you want to see. And I don't know if you guys saw the most recent commercial where they said, oh, you're under contract. They go see it closing, and the realtor just runs out the door.
Oh, wow.
You know, I mean, kudos to you guys for bringing in people like me and
From listing to closing table and beyond.
yeah.
cradle to grave.
Right.
Cradle to
Cradle to
grave.
grave.
Yeah, that's awesome.
So let me ask you this. So my client has a pre-approval.
Okay.
300,000, okay? Then we go out and find a property for, we found one for 250. Because of the market, can the client offer maybe 260? Because they've already got the pre-approval. 300.
See, they could, not my suggestion.
Okay,
In this market, I always suggest that the pre-approval matches the offer to the nickel. even if the previous pre-approval was at 270 and you're offering 265, look, if you're offering 269.9, send the pre-approval at 270. But in the same token, you don't necessarily want to tip your hand, right?
Okay.
I'm not a believer, and this is entirely up to you guys, but I'm not a believer in issuing a $300,000 pre-approval on a $250,000 house. Just the thought process is they can afford more.
Well, I was looking
Maybe
at.
they'll
a
pay
way
more.
of,
And
Absolutely.
it's really a
Someone
real
coming-
estate thing, not me, but.
I
Well, I was
think that's
looking at
blackjack thing.
someone coming and offering
Showing you cards.
cash price for that amount, versus my client who's had a loan approval
Right.
for 3.
Gotcha. I could certainly see where you may feel it strengthens the offer too.
Right.
And so it's really opinion. I think it should be to the number. I think that's a good thought process too, hey, here's my approval for 300, it's only a 250 house. You could look at that flip side. That's really more on your guys' side.
But here's the
Mhm.
thing, right? And
Yeah.
even with that, it was a Saturday. I emailed Vince. I said, Vince, I need a pre-approval for such and such for such amount. You know when I got that pre-approval? Sunday morning, Sunday morning, right? Do that with JP Morgan Chase.
Wow. That's
Do that
awesome.
with
They want to
JP
answer the
Morgan.
phone
That's
anyway,
awesome.
Saturdays and Sundays anyway, so.
Exactly.
Yeah. That's
So
awesome.
sorry,
yeah,
Ben
great
Reno,
point.
don't mean that over there, Beachland Boulevard.
Yeah.
You're doing a great job. Please don't hack my account.
Yes, we work weekends, you know why? Because that's when all the real estate transactions.
Takes place.
Crazy, right?
Yeah.
And that's something that's
Oh, here's another weird one. Ready?
What?
We call you back.
So Vince, we're coming at the end of our time here. I just want to let everybody know you got some special programs right now that you're offering through December. I think it's through December 12th for the appraisal. Is that right?
So, yeah, and if your clients apply, or if you're a buyer, if you apply online at vincecastoro.com, that's VINCECASTORO.com. If you apply online, we will reimburse your appraisal fee at the closing table. Now, why do we do that? People ask me all the time, why do we do that? Well, we do it really, the main reason we offer that is for security purposes. You don't want me writing your client's social security number on my scratch pad. So first and foremost, it's security purposes. Secondly, data input accuracy. Your client is not going to, miss their date of birth by 1 digit. Their data accuracy is going to be a lot different than me maybe not having the best connection, or someone who may not be speaking perfect English, or for whatever reason, the data integrity is far superior. And of course, it's so much faster. It's so much faster for us because here's what inherently happens with your clients who want to talk to me. And I'm all for talking to your clients. I play phone tag with them because you tell me to call your client. I call your client, they look at their phone and they don't recognize my number. So they don't pick up. So I leave a voicemail. Your client called me back while I'm doing this webcast. They got my voice. I will leave and call you. And this is ridiculous.
Yeah.
So if they go to the website, we will gladly pay up to $600 or reimburse any cost of their appraisal up to $600. We reimburse it at closing, and we do that for those reasons because, and the other thing is, we know your clients for real. A lot of your clients want to talk to me for real. They want to talk to me, which is absolutely cool. I will call any one of your clients. Here's sometimes why they want to talk to me. They want to talk to me and explain why their credit is 525. And I get that, and I'm glad to hear it. But at the end of the day, it doesn't change their credit score. Well, they
And what is
want
the minimum credit score?
580 for us. 580 for us.
So 580 credit score, you can get into a home ownership.
3.5% down.
That's amazing. That's crazy.
580 credit score, 3.5% down, 0 down for that.
We're at the end of our time. However, I just want to thank Vince for coming out, spending this time with us. Obviously, this is a part one of our series. Hopefully, we get to do this again. There's about a bazillion things to touch off when you're talking to financing your home. Althea, any leading thoughts or?
We appreciate you bringing the money in.
We're giving it away every day.
Alexa, what do you got?
Thank you really for comment. It's really, really rich information, and I believe definitely a lot of buyers, even agents, it's a very good information.
Absolutely.
Yeah, and I appreciate you guys having me. Again, it really shows what you guys are trying to do with buyers and sellers and really, what a value add you guys bring to the table. So,
Absolutely. And you know what, whether you guys out there use anybody within the Kai's company, the advantage is the Kai's family services and that you're dealing with a top-notch agent. So Alexa and Althea, people like that, which just make the whole process a lot easier. So thank you very much for joining us, and we look forward to our next time.
Next
Yes.
week.
All right.
Thank you.
Keep it real.
Keeping it real.
Hey, don't forget. Vince, thank you.
when does it shut off?
Did you shut it up?
One-stop shop.
There it is. Thank you. Good job. Excellent.
Thank you.
How'd that half hour goes by fast, doesn't it? It flies by.
It does.
Lightning fast.
Great
Half hour is
information.
awesome.
though, right?
Yeah, I think it's great. I think it's